Welcome to your Mortgage Insider Update for December the 6th. We are 1 week ahead of the Fed's Federal Open Market Committee meeting next Tuesday, as well as the CPI figures for Consumer Price Index all come out next week. So ahead of that, kind of a quiet news week. Last week, a lot of the Fed, including the Fed chairman, but other Fed members came out and spoke throughout different news outlets. And Fed chairman in particular moved markets right before the big jobs numbers that came out at the end of last week. So today, mortgage-backed securities are down, along with the S&P 500's off, and even the 10-year Treasury is down. But if we just take a look at the 10-year, we see November 30th is when the Fed chairman had his words to the market, and we saw an immediate pullback. We also saw the PCE number, personal consumption and expenditure, came out with a lower inflation number last week. And then Friday, we had the jobs report, all of which saw lower interest rates. Now, Monday, we saw a little bit of a bounce back and a little hesitation today. Notice we're sitting on the same trend line that previously had been kind of a floor. We were above that since October the 3rd. Prior to September the 21st was the last time we were below this number on the 10-year Treasury, which does give us a good barometer on the direction of mortgage rates. Now, the mortgage-backed securities, the actual mortgages that are packaged up and sold in Wall Street, through the universal mortgage-backed security market, saw a huge improvement. So November 10th was the CPI number from the month before. So we got that October number on November 10th. We had the Fed chairman speaking on November 30th with PCE coming out December 1st. So we can see the green is super improvement. This is the prices. Seeing, I think from here to here, you could see 0.25 to 0.3% better mortgage rates. We've since fallen back a little bit, but same time frame, we're still looking good. We're at levels that we haven't seen since late September. So with that, we're looking at the Fed's meeting next week for a 50 basis points hike in their federal funds rate. That is going to be a pivot if they do just make that decision from the 75 basis points they've raised the last 4 meetings in a row. That could mark the beginning of, hopefully, in the short term, the end of their rate hikes. And that would be a super positive, could turn mortgage rates in a better direction as the new year hits. With that, have a great week.